My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be one of my friends. I'm just trying to make you some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Let's play ball. Major League Baseball is gearing up for a season that starts next month with all the teams playing in Phoenix. The CDC and the National Institutes of Health are supportive, according to ESPN. And even though there won't be any fans, it feels like we might return to some semblance of normalcy. Don't take me to the ball game, but have a ball game. I think that's the perfect metaphor for today's opening, though, where the market started strong, all kind of excited about the baseball season. Dow up at 1 point, 900 points. But I think the metaphor is actually wrong, which is why we ultimately sold off hard in the afternoon. Dow ended up closing off 26 points. S&P dipping 0.16%. NASDAQ edging down 0.33%. It was quite a reversal. We're supposed to be in one of the saddest moments in modern history. While we may have slowed the spread of COVID-19, the death toll does keep accelerating. Yet earlier today, investors were basically saying, hey, it's always darkest before the dawn. Well, what do they think dawn looks like? If you judge by yesterday's action, buyers are betting on a V-shaped recovery. Boom, boom. Business comes roaring back. Everything goes back to normal. A V says we'll have this virus whipped in no time. Oh, I'd love that kind of recovery. So would you. I know that. But it's not going to happen. Don't get me wrong. I absolutely believe we are going to beat this thing. We are a strong country. I have never for a moment doubted that our scientists will ultimately come up with a way to treat, if not eradicate, this disease, and eradicate it must be. I started warning you about the coronavirus early and often, but I was never on board with the apocalyptic hedge fund managers who came on our air and wondered if society would collapse. Oh, by the way, I haven't bought a home in the pandemic islands. It's a secret archipelago where the rich, really rich hedge fund managers, they're all hunkering down. Don't bother Googling it. You won't find pandemic islands. It's actually something that I think that my partner, David Faber, spotted from above. However, V is what justifies yesterday's rally and today's vicious, panicky uplift before the collapse. And as much as I do love Churchill, I do not believe in the V when it comes to this recovery. Why not? 3 problems. First, we still don't have an effective way to treat COVID-19. Can't get back to normal without a treatment or a vaccine. Gotta have one. 2, we still don't have an effective way to stop spreading the darn thing during the 2-week period where people are infected but asymptomatic. I mean, a few days asymptomatic but then infected. And that's why we're all on lockdown, this quarantine. 3, some parts of the country, like New York, seem to be flattening the curve, but that doesn't mean we can go back to normal. It just means we've taken the absolute worst-case scenario off the table. Now, I have no idea when we'll get a workable drug that relieves the worst symptoms of COVID-19. By the way, I don't think we have one yet. That's the strong version of this disease can really wreck your lungs. I don't hear anything for that. You can be working from home just fine for 9 days, like the Prime Minister of Great Britain, and then suddenly you have to go to the ICU. Now, you better believe Boris Johnson's getting the best possible health care in the world. Yet, geez, it might not be enough. That's terrifying to me. Meanwhile, it should be terrifying to you, too. Meanwhile, we don't have enough protective gear for our healthcare professionals, let alone their patients. Can you believe that's still a problem? And I go out, I'm going to leave here, and the moment I leave here, this goes on, okay? This goes on. Do I want it to go on? No. Do I like walking around with it? No. But this goes on. Why? Because I don't want to get you sick, and you don't want to get me sick, okay? Well, maybe nobody's sick. Well, hallelujah. How about some testing? We're hearing mixed things. Turns out the rapid test may not catch everyone who's sick. Have you heard that one? I did. I did a lot of work on this today, especially if they're newly infected. We need to get serious about testing. That's the only way to beat this thing, or else we are always one super spreader away from defeat. A week ago, the market plummeted when the White House had released a somber forecast, predicting 100,000, 200,000 deaths from this thing. Since then, we've had a number of anecdotal reports that we may be flattening the curve, particularly in places like New York. So far, we do have 12,000 dead. It's possible the 100,000 figure may turn out to be too high. At least we finally recognize that this virus is a lot worse than the flu or a bad cold. You don't go on a ventilator for one of those. So people are taking social distancing more seriously. That matters. People's behavior is shameless. Put it all together, and I think we got a ways to go before things can go back to normal. We've slowed the spread because social distancing is working. You end lockdown, it's going to come right back. All that said, it's not like civilization as we know is coming to an end. We've made some progress here. Judging from how quickly China's going back to work, we could be in good shape once this is over. Retailers that were viewed as dead or dying have seen their stocks double off the lows in the last 2 days. The cruise lines look like they're getting some financing that they need to avoid going under. In fact, the credit markets actually seem open for even the neediest of companies. That's huge, if not, reckless. Plus, the Fed and the White House are moving aggressively to put this alien economy on steroids. The loans, the backstops, the grants, they're all mind-blowingly positive. Washington has learned its lesson from the last downturn. Love him or hate him, President Trump is pulling out all the stops to keep the economy alive, especially trying to help small and medium-sized businesses that often get left behind and nobody cares about. I think that's terrific. It means there'll be some local restaurants and retailers left standing when all this is over, not just big national chains. But like I keep telling you, there's no economic solution to a pandemic that's biological. You can't just snap your fingers and make those customers come back. That's why I don't believe we can have that V-shaped recovery. There's too much fear. And unlike the Great Depression, when the only thing we had to fear was fear itself, this time we have good reason to be afraid. This time the only thing we have to fear is a novel coronavirus with a disturbingly high mortality rate. Now, sure, you can point out that it's not as deadly as lung cancer or car accidents, but you know what? We go to extraordinary lengths to prevent lung cancer and car accidents. We should do the same thing for this pandemic, which would be hitting us a lot harder if not for all the social distancing. People don't want to die in a car accident, and they don't want to die from COVID-19. It's why we wear seatbelts, why we drive and have airbags. It's why you should wear a mask if you have to go outside right here, right now. And I don't feel like preaching, but you know what? I'm not seeing enough people wearing masks. So no matter how much money the government pumps in the economy, we won't be able to have a real recovery until we beat the virus. Without a treatment or a vaccine, the best you can hope for is a U-shaped recovery, where baseball season can start. But don't expect to be going to any games yourself unless you want to get on a plane, holy smokes, and stay in a hotel. I mean, are you kidding? Or an Airbnb? Oh, yeah. If we get the pandemic contained gradually, the economy will bounce back gradually. And hey, a U-shaped recovery isn't all that bad. It's not an L where we just level off at a lower level. That's a hedge fund favorite, by the way, judging by the whining I hear. Or a W where we start the rebound and then go right back down and then go back up. But that would be, by the way, the W. I have to talk about that later this week. That's the worst of all. The bottom line, without a V-shaped recovery, you have to be skeptical of these big moves higher. That's why we've been telling members of the ActionAlertsPlus.com club that they got to ring the register, despite how painful it seemed to sell into that beautiful panicked opening if you were a bull. We now have a very high cash position again. Why? Because in a U-shaped recovery, I'm expecting the stock market will pull back again. And that is when you can put some money to work. Let's go to Max in Texas. Max.
Yeah, hello.
Hey.
Here's a booyah from Houston, Texas.
Why not? Why not?
I thought go ahead.
DeAndre Hopkins. Oops. Go ahead, I'm sorry.
Okay.
Yeah.
I've got a problem stock, and it's called Ford. I bought a lot of the stuff at under $8 a share. It went up to $18. I hung on to it. It went down to 12. Hung on to it. Was going to sell it off, but it started paying a dividend, so I hung on to it. Now it doesn't pay a dividend. Now it's under $5. Should I bail out on this thing?
Remember that 18? What was that? January? We did the River Rouge in 2011. Oh, my 18. I thought I could go higher. I thought I could earn $5 a share. What do you do with Ford if you own it? Well, let's see. You've been through this much hell. Well, welcome to more hell. Let's go to Bill in Kansas, please. Bill.
Yes. Hello, Jim. First time, long time. Here in Kansas, we all love what you do. Thank you.
I love Kansas. I just love Kansas. I love that. By the way, you have a great aerospace business in Kansas. People don't realize it, and it's fantastic.
Absolutely.
There's like thousands of small businesses that make plane parts in Kansas, and I hope every one of those companies gets money from the government because they got to stay in business. How can I help?
We are high-tech people here.
Yeah.
Well, Jim, as more and more people have diminished access to cash and use Square more and more often, is Square a good short-term and long-term investment?
I like
or will
Square.
the increasing population of those who cannot pay their bills hurt this stock?
Square is good. And I've got to tell you, Jack Dorsey, let's give him some credit. He's moving $1 billion of Square equity to fund virus relief. There's a guy he is now one of my heroes. I always liked his parents. His father follows me. They follow me on Twitter. Jack doesn't follow me. Let's go to Mike in Illinois. Mike.
Professor Cramer.
Yo, what's shaking?
My call. Oh,
Besides
man, you're
Cal
the man.
education.
So,
I'm sorry, what?
So I watch you every day from my home office, and it got me thinking that it needs an upgrade. So my Mad Money hat started thinking about Wayfair, ticker symbol W, and the stock has recently issued revenue beat guidance, and it has had an astronomical couple of trading days. My question is it too late to get in? What are the risks? Ticker Wayfair.
Okay, so Karen Cramer, who was a legendary trader, she once said, okay, Jim, don't you understand? The news already happened. What do you add? What do you know now? And the answer is you and I, all we know is that it already had a really big move and the news occurred. If you want to get involved with Wayfair, you got to get involved last Wednesday. All right, I am hoping for a U-shaped recovery, but a lot of people want to take us to the ball game in Phoenix with no crowds, including like minor league places. There's an idea for you. Who came up with that? You come up with that? Yeah, I got a baseball friend here from Boston. On Mad Money tonight, they're not playing in Boston. As Mad Money, as delivery-centric economy takes center stage, could a company like Prologis be worth considering? I got the real smart CEO. Then as the market heads higher again today, at least in the opening, what was the fear index signaling? I'm going to have to go off the charts. And with many businesses challenged by the surge of employees working from home, there it is again. This WFH. I'm going to buy one private player that's making it so it's a lot better. I say you stay with Jim Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.